Papa Bear in the suit, Wall Street goes, teaching young cubs how to play the role.
All right, welcome back to Noobs. This is episode 5, and this morning it is 7 minutes until market opens, and we put on earnings trades. So we're going to cover. Hang on a second, I need to scooch this over just a smidge. Okay, all right. So for AMD, go ahead and open that up, expand that. You have, what is that? The 125 that expires in 2 days. Look at where the stock price is. You see the stock price? What was it at when we put this on? 138 or 140 or something. It closed at 138, so it's up like $12 overnight. The likelihood of this coming all the way back to your 125 is going to be very, very, very small. So you're going to put in an order for 10 cents to buy that back. So go ahead and hit close. Click it. You can do it like that. You can just do close selected. You don't have to go to the options chain if you're doing this. This is a little slower on this emulator than it is on an actual tablet or an actual. So take that away and put in 10 cents there, 0.1.
That right here.
Huh?
This thing?
Yeah, right there. Delete that. Put in 0.1. Yep. Buy it. Yep. So this way, this will be working. Go ahead and hit send. This will be working when the market opens. Now go to your pins. This actually rallied back almost. This was all the way down at $29 last night on the earnings announcement. It got all the way down to 29, but it rallied back, which is going to be good for us. You might be able to get out of this for a scratch or a small win this morning. So click both of those, or you'll be able to get out for a good win because you sold the weekly. So go ahead and hit close. This is marking currently at around what, 80 and 30. Go ahead and buy strangle. 80 and 38, so 119. But put in an order to buy this back for 30 cents. Go ahead and review. We're intentionally lowballing these because if they get filled, great. But we want to see where the markets are going to open up at. Go ahead, send. But we're intentionally putting these in intentionally low. And then you had another one, didn't you? Have another earnings? Or is that it? That's all you did for earnings? Okay, then Abraham, go ahead and open up your open yours into your positions tab. Okay, you have AMD also. Open that up. Yours is out in September. So yours isn't going to be as worthless, but it's still going to have, just on the volatility coming in, it's going to have maybe 50 cents to 75 cents that comes out of that. And then based on the delta move in this, it's probably going to have like another $2 to come out of that. So go ahead and put it in order to buy this back at $1 or $1.50, somewhere between 1 and 150. I'm thinking it'll probably be, go ahead, close. I'm thinking it'll probably be worth somewhere around $2, but we don't want to give anything away. So erase this 4.9 and put just put 125 in there, 1.25, or just 1. Let's leave it at 1. Go ahead, buy that back at 1. Okay, and then send that. Same for your pins strangle. Oh, market opens in 2 minutes. Go ahead, hurry up with your pin strangle. You already have a working order for that one. Go ahead, buy, click. No, I mean, click on both of the, click and click. There you go. Select these little boxes. Check the, go back. There you go. Now hit close. Okay, and then do buy strangle. It's marking out 114 currently. Put in one, because yours is out a month, so put in one that's going to be 50 cents, 0.5. Okay. And you have one more in there. You have a Starbucks. This is marking at 79 all the way at the bottom. Click that. And this only is a 2-dayer, so this is going to be nearly worthless. Click that. Close. And again, for this one, put in 10 cents. That's $7. Okay. And the market's going to open in 1 minute. So let's see what we got. Now go to your orders tab. Both of you go to your orders tab. And then once this market opens, you're going to have to, it'll show you the real, go to the working orders. And you see how it shows you what you're offering down here, 10 cents, what it's marking at, 82 cents over here, 50 cents, 114, $1, 478. These will update in real time as the market opens, and the market just opened. So that Starbucks says it's marking for 3 cents, which means you're going to get filled. And you got filled in AMD. Or no, you only got filled in your Starbucks. Somebody got filled in AMD. You got filled in your AMD? All right. So what is your, it looks like AMD is marking at 163. Go ahead and put in, replace your AMD for 150. Put 150 in there. Actually, go put 160 in there. See if you can get out of this. Go ahead. Yep. 1.6. Yep. View. Send it. And then for your pin strangle, you see how that's not marking any different? It's not open yet. Sometimes it takes a minute for the options chain to come open. It's up to you. You can bump that up to 170 to get out, or you can leave it and let it work. But you see it's going in the wrong direction right now, which means AMD must be coming in down a little bit. It's definitely going in the wrong direction. Crap. I would move it up to one. Cancel replace. Move it up to 175 because now it's marking at $2. Yeah, AMD is coming back down a little bit. That's why. Just let that sit because it's moving the wrong way now. Pins. Is pins still not open? What about you, Jaden? Let me look at yours. Did you get filled in anything? Your pins. Oh, somebody got filled in something else. AMD. You got filled in pins? All right, sure. You're out of pins. You're still in pins? What's yours marking at? Go to your positions. Because I can't see. Oh, you're out of pins. So go back to your positions tab now. So everybody's filled in everything? You're not filled in AMD yet. Abraham? Okay, go to your positions tab and both. Just you, Jaden. Go to your positions tab here. Let's see what you got. Why is yours so stinking slow? Click it. There we go. So what do you got? You made $350. Okay. Jaden. So you're out of everything except for what? You still have Google on, Neo, and PLTR. Okay. And then we'll go to Abe's screen. You made $400. I would just close that AMD. Go to AMD. Go to your orders. Hit that. Oh, never mind. You just got filled at 175. Cool. Bada bing, bada boom. How does it feel to wake up in the morning and make $400 for putting a trade on that took us an hour yesterday? Does that feel pretty good to start your day? $350, $400?
So we just got out of all those things?
We got out of all of our earnings trades. They were literally on overnight, and you made 400 and some bucks, and he made 350 some bucks. And it took you an hour to do that yesterday. Now, there'll be some days you'll wake up and lose $400. But it's just that easy. Anybody can do it. It's just a matter of learning what to do. All right. So let's see what's coming up for earnings tomorrow. And then we're going to get Eli on here to play some trades. All right, cool. So this is for, what do we want to look at now? It is on Wednesday. So we have Meta, ARM, Moderna, Crocs, Qualcomm, Carvana. Those are all pretty liquid that I've traded in the past and that are good trading vehicles.
You sharing a screen?
Huh? No, I'm not sharing my screen. I can. Hang on. Are you leaving, bud? Okay, good, because we're going to put on some trades and then you're going to be next. All right, I'll share my screen if you'd like so you can see. Can you? I should be sharing my screen now. You guys should be able to see it. Good? All right, let's get this back open. Why is this not open? All right. Which of those can you see the earnings coming up? Which of those do you guys want to look at here? Meta? Meta's a high price stock. It's probably too big for you guys' accounts, but I mean, you can trade it if you want. You'll have to do an iron condor in there. You can open it up. Are we looking at? Abe, open up Meta. META. So with only using $3,000 in capital, you made 4% on your entire portfolio. If you made $400, that's 4% in one day on your entire portfolio, and you didn't even use half of your capital, which is probably around where you need to try to stay. All right, it's almost a $500 stock. This is going to have to be a defined risk trade. You cannot trade naked in here. It's going to be too much capital and way too much risk for your account. So what do we got? It's 91% IV percentile, and it's got decent raw implied volatility. The expected move for the day or the 2-day is $41. You want to look at something in there, or you want to look at something in one of the further expirations? Hello.
We didn't want a further expiration.
All right. Well, either the 50-day or the look and see what you got in the 50-day. There's a $65 expected move in the 51-day. That puts you down at 400 and up at 530, 540. What do you get for selling the 400? Put. Oh wow, it looks like there's still juice in there. About $6. Go down to the 4. Or the 3. Go to the 380. That's about 1.5 the expected move. You're still at the 370, dude. Go more.
380.
Oh, you're right. I did. I was thinking 360. 380. So go ahead and click to sell that.
The call or put?
The put. Sell the put. Click the bid. Then go $10 wide. Buy the 370. That's sell. It's okay. You can just click the buy. You don't need to go up there. Just click the buy. You can only do one or the other. You can't do both. It'll automatically take the one off if you click the other. Okay. Now go back to the upside. Then what do we say? $65 move in here was the expected move. That would put you, we say around, what? Go up past the 550 there. Go up higher. Go to like the 560. That's $100 or $90 away. It's still, there's a lot of call skew in here. So go to that 580. Sell the 580. The call Remember, we're always selling out of the money and then buy the 590. Hit next. This is going to give you 160, about 170, and it's going to risk 830. It's going to put you, what, $65? It's going to put you're about 1.5 times the expected move on both sides. But you're really far out in time too. So that's up to you. Before we put this on, I would recommend we look at some other positions. You can put it on if you like. It's up to you. But we should look at those other stocks first, I think. What were the other ones? We had ARM, Qualcomm, Carvana, and Crocs. Western Digital too. That is a Western Digital. They sell hard drives. So which one do you want to look at first?
ARM one.
Okay.
I can't see the thing.
You can't see. It is the ARM ticker is AR. I think it's ARM, is it? Let's see here. Yeah, ARM. Okay. Open it. See what the price is on this. I think it's around $100 stock. IV percentile is not there. Why is IV percentile not there? That's strange. Okay, so you see how this is the raw implied volatility, the IV in here is 84, very high. IV percentile I'm assuming it's also high. This stock is also up $10 today with an expected move of $17 in the 2-day cycle. So these options, I imagine, are probably pretty juicy. Open up the 2-day cycle. For context, AMD, also a chip maker, just had earnings, was up big. So that's probably why this is up so high today, trading in sympathy with AMD. So $17 away from 143. Go all the way down to 120 or like 115 on the put side. 120, 115. 115, you're looking at 66 cents. Or 70 cents. Go ahead and click that. That puts you how many? 20 would be 22, $27 away from the price. So it's 1.5 times the expected move. Okay. Go up. I would like to look at why can I not? And then 180 on the call side. If you did something like that, sold the 180, that would put you around collecting $1 and some change. What's the capital required to do something like that in here? So it's $1.30. What is the capital that it's going to charge you? Hit review. Scroll down. Buying power. That's $1,400. Okay. Hang on a second. I gotta look at this chart and see what ARM has done here, because if my memory serves me correctly, this stock is kind of all over the place. So it's kind of on the lower side right now of its recent range, with its higher side being all the way up around 190 in the last 6 months. And you'd be selling the 180 in the 2-day. Yeah, I don't hate that. if you'd want to put something like that on, I don't hate it. Okay. Too late now. You're already filled. Then let's go to, I think Qualcomm, if my memory serves me correctly, is also a higher price stock. I think it's QCOM. QCOM. Oh, I typed that in incorrectly. What is that trading at? 170? That's not terrible. This is really beat up as well. I might just be looking to sell a put in here. Yeah, let's see what we can. It's a 91% IV percentile, and then 50% raw IV. $13 expected move, so less of an expected move on a higher price stock. Looking in here to sell a, if we were just to sell a put, you'd probably be wanting to look around 155 range. So open up the 2-day cycle and see if there's anything in 155 range. 82 cents for the 155. I don't hate that on the put side. It looks like 80 to 90 some cents you can get. You want to try that? Go ahead and hit next. Bump that up. No. Because there's only one leg to this. Because there's only one leg, it's going to automatically put you at the worst price. So bump that up to 90 cents. The review. That's going to be 1,500 in buying power. Okay. Looks like you're not filled, but you are this now published ask price right here. You see that? So you might have to come in there, offer it for 87 or 85. Try 86. There you go. There you're filled. And now what else? Moderna. Let's look at Crocs and Western Digital. Western Digital is WDC. This is probably like a $70 stock. At least last time I traded it was. All right, 67 or 66, almost 67. Go ahead. What do we got in here? 100% IV percentile, 65% IV. Wow, this puppy is really juicy. This normally doesn't have these big of expected moves. So about a 10% expected move at $6.66 in the 2-day cycle. Go ahead and open up the 2-day cycle. So $6 away would put you down at $60. Is there anything in the 60? Okay. What about, let me get this chart open on my screen too. WDC. What are you thinking here? This is again another one that's pretty beat up over the last 6 months. If you had to pick something to do, what would you be looking at doing? Abraham.
I-60.
Okay. Go ahead and click it. The sell looks like about 75 cents. Okay. Are you wanting to sell the upside in here? I wouldn't be selling anything on the upside that wasn't more than like 75 probably, or maybe even 80. I don't know if there's any juice in the 70. I think I probably would just leave it at that. Mark that higher. That's good. You're not going to get filled at that. $600 in capital. I say you're not going to get filled there. 77, it's saying 78. Oh, you're close. All right, there you are. You have your positions on. The 3 is more than enough. Now you're using how much of your capital? You're close to 50%. Yeah, you have plenty of positions on. All right. Yeah, open Eli's up. Hang on a second. Before you do that, let me get Jaden's on. Okay, Jaden.
Yeah, which one is yours?
What do you want to do, Jaden? You can see my screen with all of the tickers. Which tickers? Do you want to look at Crocs? We haven't traded Crocs yet.
Yeah, we looked at.
All right. Ticker is CROX.
Yeah.
I think you're ready. You're up, dude. You're up next anyway. You probably have to put his chair up some. All right, what do we got going on in Crocs? 87% IV percentile, 62% implied volatility, $13 move. So a 10% move in the weekly. Okay. I don't remember this stock being $130. What the heck? There's some expensive shoes. Crocs. What's the market cap in this thing? $8 billion company. It's done nothing but 74 is the yearly low, 165 is the yearly high. You can get what we said it was a 10% move, so $13 expected move, so $20 would be about a 1.5 times the expected move. 2x the expected move would be about $27. So look at 110. Too low, not enough juice. What were you just on? 113. That puts you $20 away. Okay. Then to the upside. Are you in the 2-day? You are in the 2-day. Go to the upside. You $20 away would be 155-ish. I don't hate that. What does that cost in capital? I'm imagining $1,300 for a $1.16 credit. You're a little bit bearish in here. 1330. I don't hate that. Yes, no?
Yeah.
Okay. Sure. Not filled. The markets are a little wide. Let that sit. You might have to take that down, but let that sit for now. Is there another one that you want to watch or look at?
Not specific.
Then why don't you look at Wednesday? You want to do Riot? Riot is a Bitcoin farmer. RIOT. And it's a low priced stock. This is probably not a lot of juice in here. So you'll notice here the IV percentile, because this is such a volatile thing, the earnings doesn't have as big of an impact in here. Oh, look at that. 80 cents expected move, less than a 10% expected move. And look at the juice in these options. There is nothing in here. We're not touching this with a 10-foot pole. Never mind. Okay. So I guess ARM. And I would maybe just look at something real cheap in here. Look at maybe like the one somewhere between the 115 and the 110.
Okay.
Sure. Then to the upside, looking at the 180 maybe. There you go. Nice cheap strangle, gives you 2 times the expected move on pretty much both sides. Go ahead. Why is that your mouse that looks all funky? On my screen, your mouse looks funky. Oh well. So that's a $94 credit that you're taking in. Again, it's probably, you know, $1,400 in capital. 14. Okay. That's not bad. Your break even's 109 and 180. 181. Okay. Sure. I don't hate that. Send it. Filled instantly. Okay. You have 2 on. Abraham has 2 on. You have 1 working. Go ahead and readjust that price. Your mouse looks funky on my screen for some reason. Did Abraham go downstairs? Of course he did. Buddy, Eli, you're going to have to, you're not in the center of your camera. You need to move a little bit this way. This way a little bit. Center yourself. Yeah, that's better.
Cancel replace.
Yep. Cancel replace. Yeah, go ahead and mark that down. Mark it down 5 cents. Because these are wide markets. Go ahead, review and send that. And then that's as far as you're going to chase. Oh, never mind, you got filled. I was going to say, if that didn't get filled, then you were just going to leave it and see what happens in the morning, if you get filled or not. But you're filled. Now you have 2 other positions on. You didn't use as much capital as he did. Go ahead and go back to your home screen. And then, why is yours so slow? You must have things going on in the background. Do you have stuff running in your background? You must, because yours is crazy slow. Go ahead and click positions. Terribly slow, sir. Unacceptable. All right. So is your Google position down on the day? No, you're up in Google on the day. What's losing money? You were up higher at the beginning of the day. You must be, something's down. I don't know. You have around the same amount of capital in use because you already had that Google position that's open. That Google position's using, I think, like $1,500 in capital too. So you got PLTR still on, Neo still on, Google still on, Crocs on, and ARM on. Plenty of positions. All right. We're done with you for the day. Now let's go to Mr. Eli. All right. Do you want to put on an earnings trade, bud? Okay. Oh, this Eli, show him what you put on while we were in the airport the other day. He put on a position in this TSLL. It's a Tesla derivative. It's a derivative of Tesla. And he put on, see this January 2025, that's the end of the year, January, this coming January. So it's got lots of time left, months out. He bought this 1173 call, and then he's selling closer dated calls against it. That's called a poor man's covered call, or it's also considered a diagonal spread. And it's a cheap way to get some long exposure in a particular stock. It only cost him, I think, around $200 to put this on, and he's already up $35 in it. So that's over, what, 15% on his money? It's almost up 20% on his money in a few days. So let's go to now, bud. What do you want to trade for earnings? Did you hear the companies that we were talking about? Western Digital, which makes hard drives for computers. Carvana, Qualcomm, ARM, Crocs, Riot, bud. We don't want to trade Riot. Actually, sure. But we're not going to trade this in the same way that we normally do because there's no juice in here. So go, if you want to trade Riot, go ahead and go to their watch list. Search up there. Type in Riot. That little search thingy. Yep. Type RIOT. You got to stay in the center of your screen, bud. I know. Go ahead, click that Riot. Okay. So scroll up to the at the money. You see how we're no on the actual, yeah, in here. Scroll. You got to click. Yeah, there you go. Go back to right there. You're using your, yeah, don't use your wheel, use your actual mouse. You see how there's only a few cents in here to get out of this? So it's currently trading at about 10.50. Go to the 11 right here, to the 11, and sell this 11. This 11 call right here. Yep. Sell that for 25 cents there. That says 25. And scroll. Now go up a little so we can see the other side. Yeah. Go to the 10. Nope. Too far, bud. Right there. Go to the 10 that's selling for 13 cents. Click that. All right. Then now scroll all the way back up. Oh, sorry. The other direction. Yep. Right there. Now collapse that. See this little arrow on the little, yeah, that little up arrow. Collapse that. Then go to the 16 August. Yeah, you see that right there? Drop that puppy down. Then go to the 10.5 strike in here. What happens when we buy? You scrolled over a little bit. So scroll back over to the left. Click and drag it to the right. Other way, bud. There you go. What happens when we now buy this 10.5, buy the 10.5 on both sides? So buy the one that says 97 cents. And then buy the one that says 81 cents. The ask over here says 81. To the right of that. You were just there. Just go to the right. 81. See, but that's, I don't know that there's a trade that you can come up with in here, bud, because you're paying almost $2 for that long 10.5 strike, and you're only collecting about 30 cents, and we're only making a half a dollar wide spread by selling the 11 and selling the 10. So it only gives you, you're going to end up paying how much for this whole thing? Go up to click next. I think you're going to be paying close to $1.50 for this. $1.35. But look at your strikes. You're long both of the 10.5s, but then your short strikes here for the 10 and the 11 or whatever are only 50 cents away from your 10.5 strike. So ideally, you should be only wanting to pay somewhere close to 50 cents for this, not $1.35. There's way too much juice in these. No, there's way too much juice in the expiration that expires 2 weeks from now, and not enough juice in the expiration for earnings. So I don't think we should trade this. Even this way, I don't think we should trade it. Huh? Yeah, get out of here. All right, let's find a different one. Do you understand why? Because if we pay $1.35 for that and we only have a spread that's 50 cents wide, that means the most that spread will ever be worth is 50 cents, right? So when when the premium comes out of those expirations that expire tomorrow, um, you're you're still the most that you can have that spread be worth is 50 cents, but you paid $1.35 for it. So it's not a good situation to be in. You would want it to be able to be worth like $1.50 in order for that to make any kind of sense, or at least $1. Rumble? That doesn't have earnings, but you can put a position on in Rumble if you want. You can sell a put in there. Go ahead, click it. Okay. Since it's not an earnings stock, minimize this expiration, go out to the one that says 51 days left. See how it says 20 September 2024, parentheses 51. That's the 51-day expiration. And then I would just be selling the, oh man, wide markets, 35, 75. Go ahead and click this where it says 35. Click that on the 6 put. The puts are on the right side of the chain. And then the 6 strike is in the center. You see that? So then the one where it says 35. And now look at the last that this sold for was 65 cents. So try and sell it for 65 cents. I doubt you'll get filled because it's really, yep, next. Really wide markets. You got to speak up too. That wasn't speaking up. And you're way too far to the right. Maybe we need to just fix your camera. Huh? Yeah, we never turned on the light in here either. All right. Okie dokie. Yep. Put it in there for 65, hit review, and see if you can get filled in that. I doubt you will, but it's worth a shot. The markets are really wide in there, bud. What's up? Yep. Oh, you did. Oops. I did a boo-boo. Move top. All right. Oh, I got rid of our cameras. Hang on a second. Order. Move to bottom. There we go. All righty. You got filled right away. Okay. So now you got a position on in Rumble. Let's get you one earnings trade on. Let me see if I can pick the best stock to trade here for earnings that I think is the best anyway. Let's go to Qualcomm. It's QCOM. Okay. Let's just sell some real cheapies. Go to, yeah, don't do the 51 day. Go to the 2 day. Okay. And then scroll up to like the 155 or the 150. Click, do that 150. That's $25. That's 2 times the expected move. So the 150 strike on the put side, remember the puts are on the right. The 150 strike. Strikes are in the center. 150. Okay. See how you're selling that for 42 cents? All right, then scroll all the way up. Higher prices go up to like the 190. No, up. You're scrolling over, dude. You're going the wrong way. You're going down. When I say up and strike, I know I used the wrong term. You're going the wrong way again. You need to go the other way. There you go. Down, I guess that would be. Higher prices is what I meant. Go to the higher prices. Trading at 175. So, and I think it's a $13 expected move. So we want to go at least 30 bucks higher. Go higher. There. Whoa, 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 whoa. Too high, dude. Come back. There you go. Stop. 175 plus 30 would be 205. That gives you really cheapo right there at 205. If you want to sell that one right there for 32 cents, you see it on the left there. This is calls now. Then go to next. Let me look at this. Let me look up the chart here real quick and on my phone. Qualcomm. Ooh. Yeah, $75. Okay. Go ahead, hit review. It's probably going to be about $1,300 in capital. $1,700 in capital. Jeez Louise. Why is it so expensive? Hang on, I'm thinking. I'm trying to decide if I want that much risk. Do you know what we're doing by selling these? What's that? Yeah, but do you know what we're picking? You see where it says the break-even price right here? Break-even price. Down, down, down. Stop. Up a little. Right there. Up. Break-even price. If the stock stays between these two numbers, because we sold, I think we sold the 150, and then on the other side, we sold the 205. So if the stock stays between these two prices right here, you make money by expiration, which is in 2 days from now. Let's look at, go back out of here. Let's look at putting on, let's look at the 50-day expiration. Go out of here. Go ahead and hit the X here. X out of this one. Yep, that little X right there. And hit the X again. Then go back up to the top and collapse this expiration. Let's see if we can get you further away from the stock price and give you more time to be correct. All the way up to the top, bud. Yep. Minimize that. Go out to the 51-day, $23 expected move. We were selling the 155. Let's look at the 145. Give you $10 more room. Actually, 130 right there. Scroll back over to the left here. You've got it so you're not looking other way. There you go. Look at the 125 there, or the 130. Go ahead and sell that 130 instead. Yep. You got to hit the bid. Remember? The bid and the ask are the two that create the different prices. So it looks like you'll be able to sell that for around 60 cents. Now scroll up. Up. Go all the way up to like 220 or 230. Hit that 240 there. Sell that 240. We're on the calls now. Remember, we're selling out of the money. How you know it's out of the money is it's not shaded. And if we're selling it, we're going to be hitting the bid. That's buying it. So you hit the ask. Oh. There you go. Wait. Yeah. We need to get rid of, go back down. Click that again. Click the one that you did on accident again. Should take it off. There you go. So now we're $240 on the upside. So we're really, really, really wide. Only collecting about 36, 37 cents for that call. And then on the downside, we're at 130. So that's giving you 2 times the expected move on the downside and over 2 times the expected move on the upside. I like that better. Go ahead and click next. $97 you're taking in, like that. Hit review. Should be cheaper to put this trade on because we're a lot farther away from the money in this. Now look at our break evens. Before it was 150, now we're down to 130, and 240, whereas before that was, I believe, 205. So it gave you an extra $35 to the upside. Still costs the same amount of capital. Go ahead and put that on. And you're filled. This does have earnings though, so if it doesn't get a big move for earnings, that thing will lose a lot of its value by tomorrow as well. So what are we looking at? Go back to your overview and your positions. And there was another stock I wanted to look at, which is Disney. They had an interesting looking chart, I thought. So you have 6,500 used in capital. Let's look at Disney. Bring up Disney, DIS. I'm not sure when their earnings is. But I think in Disney, if we can get away with like maybe selling the 85 put, that might be a good option in here. Go to the 51 day and see what you can get for the 85 put. $1 for the 85 put. Yeah, I think we do that too. Good IV percentile here. This right here, up at 87% IV percentile. Do you see what I'm looking at, bud? Up top, up by where the prices are. You see up these four numbers up here, up, 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 down, right there. You see that 87%? That's 87% of the, this currently is higher than it has been as far as implied volatility. It's higher than 87% of the previous year that we've come through currently. So the raw implied volatility, Disney isn't a huge mover. So this isn't crazy high, but it's not terrible. But this is good. It probably has earnings coming up. So over the next, I don't know when, maybe week or a couple weeks, there will be an earnings announcement. But this is purely directional play. We're only selling one side, which means we're willing to buy shares at $85 and we're going to get paid $1.03 or so, or $103 to take on the risk below 85. So go ahead and hit next. And then I'll tick that up to 102. Yep. Hit preview. It's probably going to cost you at least 1,000, close there, about 940. Okay. Hit send. And you're filled. Do you have any questions? What about earnings? You got to speak up, dude. You got to like talk real loud. What are they? So earnings because these companies are publicly traded, meaning that anybody can buy them. So they have an obligation to the shareholders to announce how they're doing every 3 months, every quarter, 4 times a year. They have to announce, all right, this is how much money we made for our shareholders. This is what the outlook on the company is for the upcoming year, the upcoming quarter, how we think we're going to do. So they give their estimates and their guidance for the future. They say, these are some of the hurdles that we're coming up against. This is where we're making the most money. This is changes coming up in the company. And the actual CEO gets up there and talks to all of the people that actually own the company and tells them what's going on in the company, how much money they make, how much money they expect to make, obstacles, that kind of stuff. And they just give an overview of how the company's doing. It's kind of like a doctor's checkup every 3 months. So people that own know whether or not they still want to continue to own the stock or they want to trade the stock one way or the other. So they do that after the market's closed, either right after the market closes or right before the market opens. They'll have an announcement. They'll put out all their numbers that says this is how much money we made. Here's our gross revenue, or the amount of money that we've done in business and how much of that is profit or loss. And then after they put out those numbers, they'll actually have like a conference call with all of the shareholders so they can listen in and hear the direct stuff coming from the CEO to know how the company's doing and what they think the future looks like. $11 on your phone? Oh, in your portfolio and Cash App? What are you up so big in? That's a... What stock is up? Oh, do you have AMD maybe? Or Tesla's up big today? Oh, that's good because I have a Tesla position too. So that means I'm probably making money too, right there with you. Hey, look at that. You're up in Tesla and so am I. You're in good company. All right. Well, that's episode 5. That was a fast episode. I know that this is still probably all really new to you and you don't necessarily know what's going on, bud, but stick with it and keep doing it. And the more you do it, the more you're going to understand it. Thanks for watching, guys.
Teaching young cubs how to
Oh,
play
that
the
was just like
role.
everybody the finger.
Market
That was a
watch
peace
stacking
sign.
cheddar.
Peace.
New with the knowledge, nobody does it better. Options can't tight calls and puts. Stocks flipping quicker than they flipping the goods. E-trade dashboard, money to print. Boys learning well, following the blueprint. Noobs in the game making gains. Papa showing hustle ain't just chasing chains. Trading like gangsters, setting the reins. Teaching them the street of ball and financial domains. Bull market, bear market, riding both tides. Papa got the boys all trading with pride. Short sell, long buy, never DeFi. Family hedge fund, fortunes can't hide. IPOs popping, reading the cues. Charts full of knowledge, breaking the news. Swing trading, day trading, grooving the moves. Shout out to the fam, puts of the trade ain't loose. Noobs in the game making gains. Papa showing hustle ain't just chasing chains. Trading like gangsters, setting the reins. Teaching them the street of ball and financial domains.